Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're going to discuss how you can secure your first $150,000 without documentation using this 2026 funding sequence. And this will be a refresher on the business credit card stacking video that I did last year. From the beginning of January of 2024 to May of 2026, I've gone from having one secured credit card with a limit of $200 to now over $1 million in business credit and funding. And I want to be clear on this. I'm not a coach. I'm not your mentor. I'm not a financial guru. I'm a regular guy who had bad credit, and with some discipline, some self-education, and being disciplined and determined, I was able to achieve this feat, and anyone can actually do it too. Now, this entire process has been documented on my channel. Literally, you can see from the time I started my channel and repaired my own credit to all the approvals that I've gotten up until right now. All of the information I provided has been 100% completely free. I have over 500, probably by the time you're watching this, 600 or more videos on business strategies, tips, inspirational, motivational content, whether it comes to finance or credit or anything in between that. If you want to learn how to start and structure a brand new business, then please check out my business credit playlist down in the description below. I've also recently updated a couple videos where I show you how to start your business and structure that business properly for high limit funding. And if interested, you can watch those videos after this one. But for now, we're going to focus on your business funding sequence and how you can actually get this funding secured. So without further ado, let's get right into the video. Now, most people have a general idea of what credit card stacking is and what a funding sequence is, but let me give you a simple explanation into what this actually is. And in this instance, we're talking about business credit cards. So credit card stacking is a strategy where you apply for multiple credit cards in a specific order to access larger unsecured lines of credit than individual small business credit cards can offer. I'm going to explain how that works, what the cost benefits are, and when it may or may not be a good option for you as a small business owner. Now, when it comes to a funding sequence, that is the organized strategy that you would actually stack these credit cards in. For most people that are using this strategy, we're going to be doing it in the hopes that you already have a business plan in mind. You already have a proof of concept. You already have a general idea of how to effectively make money with your business. If you have no idea what you're going to actually be doing for your business, you have no experience in business, you just want business funding, then I don't believe this is for you. Rather, I think you should actually try to understand exactly what a business is, understand that you have to solve a problem for people or provide them with value in some way, form, or fashion, and also understand that if you're just trying to make money fast, you will likely fail by trying to do this, and the repercussions of taking on all of this debt and having it actually go into, let's say, collections or a charge-off status will set you back years. So don't take this very lightly. This is very important. It's a very big deal. Now, this is how credit card stacking actually works. The first thing you'll need to do is review your personal credit scores. You do need to personally guarantee every single credit card that you're going to apply for. Now, if you're watching this video right now and you have bad or challenged credit, if you have any negative items on your credit report that might prevent you from actually having a fundable credit profile, that is completely okay. What I recommend is using Rising. Now, Rising is a platform that helps give you access to all of your credit reports and scores. It shows you what may be hurting your score, and it helps you take action through tools like custom dispute templates, bureau response tracking, and also rent and utility reporting to help build positive history. Rising also includes a personalized credit game plan and score goal tracking, as well as educational tools and guidance on products like secured cards and credit builder loans. So right now you can access your credit report for $1 through their 7-day trial. I highly recommend that you check that out if you are having any issues. I also have a credit repair playlist down in the description. In those videos, I show you how to use rising.com to completely clean up your credit. But no matter what, the first step in credit card stacking is to review your personal credit scores, your income, as well as any other relevant qualifications to identify cards that you will qualify for. I do a lot of research on credit cards, and I provide all the data points so that you can reasonably improve your odds of approval for each of the cards that we're going to talk about today. Now, your credit score typically needs to be at least a 680 or above to get qualified for most business credit cards, and it is worth noting that your approval is not guaranteed. Just because you have a 680 credit score does not guarantee that you will be approved for anything. For example, in January of 2024, I had one more charge off left on my Experian credit report. That was around the time that I actually made my YouTube channel. And when I was doing this, I wanted to just test a few cards that I might qualify for through some soft inquiries. I did not get approved. So even if you have a high credit score, having just one derogatory mark can prevent you from getting any credit card that you would like to get. Now, with that said, you'll want to look for cards that have 0% APR. So this means a promotional period. Sometimes it's 6 to 18 months where you do not have to pay interest on that card. You just need to make the minimum payment. Now, why is this so important? Well, let's say that I'm trying to make a large purchase for something business related. I want to have a certain period of time where I can actually benefit from that purchase in order to make money and then pay it back with my profit. But this strategy is not just about getting random cards with high limits. You want to also look at credit cards that offer rewards or even spend bonuses. If your business industry requires you to purchase, let's say, software, there are certain credit cards that give you 4 to 5% cash back for that particular transaction. So you want to look for a combination of things that actually make you money while you're also charging things to these credit lines. Now, I recommend choosing between, let's say, 5 to 10 business credit cards to apply for. And remember, you want to tailor these cards to your business and your business needs. And of course, you target business credit cards because a majority of them do not show up on your personal credit report. So let's say you make a large purchase using your personal credit card. That might put your utilization at like 95%. Doing that would completely tank your personal credit score, at least until you pay that credit card down, and then it would go back up. Now, for business credit cards, as long as you're making the minimum payments on time, you don't have to worry about that showing up on your personal credit. Now, if you default on that card, then yes, it will show up on your personal credit. But if you took the time to vet your business, you have a good idea, you understand what you're doing, you actually have experience in this, then the chance of you defaulting should be fairly low. Honestly, depending on who you are and how long you've been in business, defaulting or usually like just failing really shouldn't be on your mind. Normally, you have these precautions already set in place. That way, your business can keep on moving no matter what climate you're currently in. So we already discussed some of the benefits of credit card stacking, but I wanted to share personally how this has benefited me. Now, if you're an entrepreneur and you want to start a business, for a majority of businesses, you do need to spend money in order to make money. Either that or you have to spend a lot of time. I have an old video that I made where I was talking about saving $15,000 per year on a low income. And I was doing things like putting my money into a high yield savings account and trying other ways to maximize off of interest and other ways to save and grow my money. My goal was to save $100,000 and I struggled for a very, very long time. The person that introduced me to business credit was a coworker at the last job that I had. And one day he came into work and he told me that he had got approved for $30,000. And I'm like, $30,000, how did you get that? And he was telling me about applying for business credit cards. And I had no idea what he was talking about. And it sounded like it was like very complicated. I thought it was like hard to get loans for a business. And my interpretation of that was that I needed to have revenue and all these other things in order to actually get approved for such a thing. Not to mention, I was thinking that loans have high interest rates and my credit score was bad. I can't do that. So I kind of brushed it off. But then he came into work a couple weeks later and said he got another $30,000. And I was like, man, in the time span of like 2 or 3 months, this guy has gotten $100,000 in credit line and I'm struggling here to save money. And I think that's when like a light bulb went off and I was like, well, if time is currency and time is inherently more valuable than anything else, if it takes me 5 years of my life to save up this amount of money, maybe even 4 if you're doing really well, but I could get the same result just by having good personal credit and by leveraging that in order to make more money, then what am I doing? Especially with 0% APR credit cards like he was getting, that seemed to make a lot more sense. It was easier to get approved for, let's say, $60,000 to $100,000 to $150,000 than it was for me to actually save that money. So I would think about it like this. How long would it take for you to save $150,000? It might even take you 7 years depending on your situation. In 7 years, if you have bad credit, most things will fall off anyway. There is a statute of limitations of around 7 years for bad debt. So even if you do nothing at all, not even credit repair, just by waiting 7 years, you would still have that opportunity to get this funding. So it was like either way, what would prevent you from trying to have good credit when that would be a more viable option when it's very hard in comparison to save money? Not to mention the cost of inflation and how much your money actually will diminish in value in that same time frame. So that's why having excellent personal credit and having a structured business is so important, and many banks only check one of the 3 credit bureaus. Now, with that being said, here is a visual representation of what stacking $150,000 in credit cards could look like. Now, as you look at these credit limits, I want to make note of something very important. Your credit profile is more important than your credit score. Banks use specific algorithms that dictate how risky you are. Now, looking at your credit profile as a transcript, you need to have primary credit card lines that have similar limits. Also, keep in mind that too many consumer-based credit cards like credit builders or store cards will not actually help you increase your approval odds. Now, credit builders are helpful in the rebuilding phase to boost your credit score, but it doesn't mean that it'll help your overall credit profile when it comes to getting funding. Now, I don't want to knock them. I've used credit builders to help me boost my credit profile. I still have them reporting to my credit to this day. However, I just want you to understand that that cannot be the only thing that you have. Banks will lend based off what they see on your credit report. So if you have $500 credit cards with a 750 credit score, you will probably only get approved for business credit limits around $1,000 to let's say $2,000. You also want to notice the different bureaus that each credit card will pull from. Now, I have several videos out right now that talk about which business credit cards pull from which bureau. You guys can check out those videos. They are in my business credit playlist down in the description below. But Experian is normally the most pulled bureau, and you can see that with Chase, Wells Fargo, American Express, and PNC here, as well as TransUnion with US Bank, BMO Harris, Bank of America with Barclays, and Associated Bank as another example, and then Equifax when it comes to Truist Bank. So again, the main thing I really want you to keep in mind here is that, like, I have videos that show you which bureaus each of these business credit cards will pull from, like multiple other credit cards if you're interested. But this is what it would look like to get $150,000 in 0% APR credit cards. And also keep in mind that 0% APR promotions can change. So this isn't like engraved in stone. Depending on when you're watching this, there can be changes. And some people can get $25,000 between, let's say, like 6 credit cards, and they can get access to $150,000. It all just depends on how your credit profile is structured. Now, I have a video that shows you how to actually structure your credit profile for high limit funding. I'm going to link that video right here if you're interested in that. I also want to mention that I do have a credit card hard pull guide that you can actually download from www.successwithstevensmith.com. It is completely free. It gives you over 100 banks and credit unions showing you where they pull from. And then I added some other ones here, for example, like Experian when it comes to the Navy Federal Go Biz Rewards card, or TransUnion and Fifth Third Bank, and Equifax and let's say like Citi or KeyBank. So there are plenty of places that you can take a look at. I just want you to know that there are resources available that can help you determine where these credit cards pull from, but things change all the time. So again, I would not take anything as being like in stone. It'll never change. Things change all the time, okay? Now, really quick, let's talk about when credit card stacking can be a good idea. Now, for new business owners that don't qualify for, let's say, traditional small business loans or business lines of credit or other working capital, you may benefit from credit card stacking. Additionally, if you have small companies or low revenue businesses that have yet to accumulate assets and you're unable to qualify for, let's say, like SBA loans or larger loans, then you may want to consider this as a good option for you. It's a very easy way to get access to capital fairly quickly, and you can usually get approved in, less than 24 hours and receive your cards within, like, let's say 7 to 10 business days on average. I just always recommend that you have a good business plan in mind before using this option for 2 main reasons. Number one, if you get 0% APR cards, you don't want to waste your promotional period. You don't want to get these cards, have no idea what you're going to do, and then in that time, you could have used this to run a funding sequence or actually a business opportunity or to make money in some way, form, or fashion. But if you don't know what you're going to do, you might just want to wait and think about that before wasting that opportunity. And secondly, you may want to wait until you actually have some business revenue. That way, if you use these credit cards for something and things don't work out the way that you think, you have the ability to pay these cards back. Now, we already talked about the credit score that you would be expected to have in order to qualify for a majority of these cards. Once again, I would at least say it's a 680. Now, here's an idea on the credit card requirements. Again, this is general. I have individual videos on all of these cards, but I want to give you a general overview. Now, I would have your utilization 10% or less. If you want to maximize your credit score, 5% would be ideal. You need 100% on-time payments, okay? You want 0 derogatory marks. That means no collections, no late payments. I also would recommend having 3 to 4 years of credit history. Now, if you don't have 3 to 4 years of credit history, remember I mentioned rising.com. I've been recommending that people use their utility and rent reporting feature because it backdates up to 24 months. That can add some credit history to your profile almost instantly. And that does not require you to have to use authorized user trade lines that are temporary and that will fall off. You can get those 24 months of history instantly by using rising.com. So that is an option if you don't have a lengthy credit history right now. I do recommend having a good mix of credit. That would be, let's say, at least 10 positive accounts, a mix of revolving as well as installment loans. And when you're doing this process, I recommend having 2 or less hard inquiries. And if you do decide to actually walk into a branch, never walk into any bank asking for no doc loans or no doc business credit cards. You don't want to do that. Instead, you want to ask them, what are the requirements that I need to get approved? So now you have an idea of the credit score that's required. You have an idea of the benefits of credit stacking. You even know exactly what type of credit profile that you would need in order to actually get approved for these cards. Now, the next step will be relationship building. This is how you actually get the larger amounts of credit line with these credit cards, in addition to having a structured credit profile in order to have high limit funding approved. Now, I always recommend that you treat banks the exact same way that they treat you. There's a way for you to actually pull a credit report on the banks the same way the banks pull a credit report on you. Now, banks do have credit ratings assigned by credit rating agencies like Moody's, Standard & Poor's, and Fitch. These ratings reflect a bank's financial health, risk management practices, and market position. These credit ratings help investors assess the risk associated with investing in a bank's debt or other securities. A higher rating indicates a lower risk of default. So I'm sure you're asking, what does that mean for me? Well, you need to know if the deposit relationship with the bank is improving or decreasing over the past 6 months or year. You knowing this will actually help you determine if you're able to get maximum funding from that particular bank, because you'll understand that bank situation based on fractional reserve lending. This is a practice where banks keep only a portion of their deposits as reserves and they lend out the remaining portion. Now, this allows banks to create money in the economy as the loaned amount is later deposited and can be used again, which means you could put $1,000 in the bank. The bank only keeps a fraction of that money, let's say $200, and the bank can lend out the rest of that money, that would be $800, out to someone else. Which is weird because they tell you at any time you can withdraw the money, but if we all went to the bank at the same time to get our money, none of the money would actually be there. So here's my recommendation. When you're doing your relationship building, make sure that you actually check exactly what's going on with that bank. Are their deposits increasing or decreasing? If they're increasing, they are more likely to give you higher limits. If it's decreasing, that's when that bank will become more conservative. So once you actually look at the report on this bank, you will then choose a bank where you can see the deposits have been increasing. Then you want to open a business checking and savings account, and you want to do reoccurring deposits into this account, and you want to do this for, let's say, 60 to 90 days. Now, 6 months would be the longest term that I would recommend. That will help you maximize how much funding you could possibly get. And I do want to point out that relationship building is not always necessary. There are banks like American Express, for example, where you could actually just apply for their credit cards. Most of their credit cards are charge cards, so your limit really will be based off of how often you use the card. American Express does have a few 0% APR credit cards like the Blue Cash card, which I highly recommend that you look at. Once again, those limits aren't really determined by a deposit relationship. However, they will be looking at your credit profile and how high your current limits are in order to determine exactly what your initial starting limit will be. But for the most part, you do want to build a deposit relationship with a bank that actually has an increase of deposits. That way, you know they have more money to actually lend out. Now, recently I recorded a video called How to Get Business Funding Even If Your LLC Has No History. If that video is out, I release videos like sometimes at different times, but if it is out, I'm going to link it right here. That video goes into great detail about starting a business funding sequence. I highly recommend that you watch that video. However, let's briefly touch on this. A business funding sequence or funding rounds refers to the sequential stages a company goes through as it'll raise capital to grow and scale, and typically starting with the initial funding and then progressing through various rounds. You need to strategize and know how you're going to be getting funding. Now, in this video, I'll still give you a few different strategies that I've used to do this based on your current situation. Now, let's say you have low credit card limits on your personal credit report and you don't have a lot of money to deposit into your business bank account. I have a video on the Lightstream loan. I suggest that you watch that. In that video, I talk about how you can get this personal loan for up to $35,000 for your very first loan. And then you can actually go back to them around 91 days later and you can get up to $100,000. And there is a strategy in order for you to do that. Now, the reason I bring that up is because when you get this personal loan, it can take around 15 to 45 days for it to report to your personal credit. Now, if you deposit those funds into your business bank account, then it's likely banks like PNC, Truist, First Citizens, Wells Fargo, Chase, US Bank, any of these, for example, they are likely to give you at least 75% of that deposit amount on a credit card line. Now, this is only what I'm recommending for people that have a very thin credit profile or very low credit limits currently. If you have high credit limits or similar limits to what you want on business credit cards, you have that on the personal side, you don't need to do this. You can deposit small increments of cash for, let's say, 90 days or so, like we talked about. And then once you get approved for your first business credit card, you can then liquidate that card and then use that to deposit the next bank account. Now, no matter which way you go, whether you use your business revenue capital or whether you use a personal loan like the Lightstream one, or whether you just use your own personal credit because it's so good and you have high limit credit cards, you can leverage that. You'll choose one of these options. If you do this around 6 times and get, let's say, $25,000 between each of these cards, you will access $150,000 in business funding, and that doesn't even include business lines of credit. So let's actually summarize everything that we talked about here. A new business can acquire $150,000 or more in 0% interest funding, and that can be for a 12 to 18 month time frame. Usually that's the promotional period unless there's a card with a brand new special promotion. Using credit card stacking, it's a very simple and easy way for a brand new business to raise capital. Many lenders only check one of the 3 major credit bureaus, which will enable you to get multiple approvals across all 3 bureaus, potentially getting, let's say, 8 to 12 credit cards. And of course, you can remove those hard inquiries from business credit cards. I'll link a video right here that shows you how to use rising.com to remove those hard inquiries. You guys can check that out. But in order for this to work, you must have the right credit profile to be approved. You do need to personally guarantee this. If you're having trouble with your credit, or you have bad credit, or just a few things that you have to get off, highly recommend, again, rising.com, work on that. Take care of your credit. And even if you just have, let's say, Experian cleaned up, that's great. You can just apply for business credit cards from Experian. If TransUnion is the one that looks better, then just do TransUnion for right now while you work on the other ones, or Equifax. It's okay for you to just lean on one bureau while you're trying to correct the rest of them. But remember, to receive the highest possible credit limits, building a relationship first is usually the best approach. Opening up a checking, a savings account, okay, that's usually best, as well as depositing some money. And then depending on your credit profile and similar limits will determine whether or not you might want to use some of your own capital, deposit more money, look at that Lightstream personal loan hack, and then doing that and then depositing depositing money and then paying that loan back. Those are all different options that you can use in order to enhance your funding sequence. I want to thank you guys so much for watching this video. If you got any value from this, please like and subscribe to the channel. If you have any questions, drop those in the comments below. I would be more than happy to answer that for you. If you have used any of these strategies in order to start a funding sequence or to complete one, please drop your experience in the comments below for others watching this video. Your experience will always help others who have not done this yet. So I truly appreciate when you guys do that. So once again, thank you so much for watching this video. I truly appreciate it, and you guys have a wonderful day.